Well, good morning, everyone. I am A.F. Thornton, Chief Investment Officer of Blueprint Quantitative Strategies, and we're here this morning to look at the day ahead and build a little sandbox for us and look at what the best approach will be. So it goes without saying that we have some major global events going on. Maybe one a little bit positive, maybe one a little bit negative, depending on your point of view. The positive that I think is looming out there is that the Ukraine war is probably within weeks of coming to an end because Ukraine has been sadly defeated, and at some point they're going to have to surrender or cut some deal with the Russians, but that deal is almost over, and notably you don't hear anything about it in the lamestream media these days. So just be aware of that. That's something that could come out as a surprise and certainly would probably boost the markets wherever they happen to be at that moment. And on the flip side, we have, of all people, one of my favorite people in the world, Nancy Pelosi, over attempting World War III in Taiwan. And so on the one hand, the bulls could get their face ripped off, depending on how China reacts. On the other hand, the bears could get their face ripped off if the Ukraine conflict comes to a close. So as always, never a dull moment to think that troublemaking Nancy Pelosi could actually be the catalyst for World War III is enough to keep you up at night by itself. Now, in a lot of cases, you would think that all of these things are already priced into the market, but I would argue that China's response to Nancy Pelosi's visit to Taiwan is not built into the market, because who would even know how to price it? There's a camp out there that says if China does something, or wars generally tend to be favorable, and you can even cite the February 24th invasion of Russia. The market rallied and everything, but you forget what happened before you got to the rally. The market was in the hole. So we've been rallying here now since June 17th, since the 40-week cycle low. And, I don't think this is good news. So, and the issue, if you don't know it, is Taiwan Semiconductor. They make all of our high-end chips, 90% of them. If Taiwan Semiconductor is interrupted for whatever reason, that is going to have a huge effect on Western economies. I don't know why we're so dependent on something that's that volatile. It's just crazy, but the world is crazy anymore. Nothing makes sense to me anymore. And but that's the issue. And remember that there are so many things China could do in retaliation. Number one, they hold $1 trillion of our treasuries. They could dump 200, 300, 400 million of treasuries on the market and cause interest rates to spike overnight, which could be devastating to Western economies. And if you go to my on the YouTube channel here, you'll see a little excerpt from The Big Short, where I have a little, sort of a rehearsed discussion with John Hurt, may God rest his soul. And it's pretty sobering what they could do. And remember, they can also blockade Taiwan, and they could cut off supplies. And again, anything that takes down that chip manufacturing could really, really hurt us. So, and don't expect the Chinese to always do something overnight. They could wait a little bit. It could come later. So, but that's a big, big problem on the table, and just another example of how incompetent the Orwell administration is, and President Orwell. It's just mind-boggling how incompetent this administration is. Even if Nancy Pelosi was going to visit Taiwan, this was not handled well, given the sensitivities. And one thing I learned from you know, over the years, just in business and in practice. And Alan Dershowitz calls it the shoe on the other foot test. Put the shoe on the other foot. Remember that when Japan attacked China in World War II, they staged everything from Taiwan. And Taiwan is unsinkable. I mean, they can take some missiles and take out our aircraft carriers, but they can't sink the island. So the idea that the Western countries, and especially this country with all of its meddling all over the world, would be able to stage an attack against China from Taiwan is a very sensitive issue for them. It's no different than if the situation were reversed and this was happening in Mexico to us or Cuba. I mean, look how we reacted in Cuba. So, as always, there's two sides to the story, and keep all that in mind, you know, because that is definitely something that could derail this rally and recovery. So those are my comments on the global situation. It remains a risk. Do not enter this market without a stop. And remember, even stops aren't 100% foolproof. They're pretty good, but not 100%. So I don't know where that came from. And let me just, again, remind everybody of all the precatory language that we have to, always remember, these are for educational purposes. These videos, this channel, this community is about helping people gain their freedom and learn how to trade and boil it down to a structure that people can follow and a discipline that people can follow without being all over the board. You know, I was thinking the other day, you know, you buy any kind of investment software, you go to a broker with your software, and basically, you know, it's incredible. There's 150, 200 indicators on there for you. And if any of them worked, why would you need so many? So that's something I always keep in mind. Looks like we got some positive economic news here coming out. So we'll look at that shortly. As I speak, we've got a little bit of a spike. So keep that in mind. And then if you like what you're seeing here, what you're hearing, please give us a like, give us a thumbs up, and consider joining the channel. We'd love to have you be a part of this community that we're building here, and hit the notification button if you want to be notified of these future videos. So, and then you can always go over to the website at blueprinttrading.com, just drop the E from Blueprint, and check things out over there. We have a lot of good information. It's all free. And go to the blog section, and hope you'll enjoy some of the things that are there. So with that said, let's just jump into it here. And I think, why don't we just go from monthly to weekly? On the monthly chart, so far, we're staying above the monthly 5 and 21, which I think is pretty key. And those levels sit around 40.85 or so. We definitely got down there overnight, believe it or not. So, you know, there's a relationship between the monthly, weekly, and daily charts, you know, these moving averages. I don't want to get into the math right now because I want to move quickly, but that's a key line to maintain. And as I look at this chart, you know, it's not very often that you recover as much as we did in July from, you know, such a gnarly bar in June. So, I mean, this is all pretty bullish. And in fact, if you look at the last 3 months, we've rejected prices below the monthly 21 and the monthly 5. I mean, reconnecting with the monthly 5 is pretty critical here. So, again, if we're going to go north, I'm using that 41.89 June peak as sort of my breakout level with some confirmation from the auction. We have to see prices being accepted at that level. Otherwise, you know, it's not unusual to retrace about half of the July bar before we turn around. And then, of course, if this is going to stay negative, you know, we may come down even further. But you can see in a lot of these, this looks very similar to the kind of recoveries we saw back here in like 2020 and 2018. So it would have to be characterized as a cyclical bear if we are going to move out from here to new highs. And that might mean that we have a little bit, maybe whatever's going to happen may be out in our future. So We haven't recovered yet, but that's what I'm paying attention to, and this is the biggest picture of it. These high volume nodes sitting over here to your right are the areas of support and resistance. And then if we drill down to the weekly chart, not too much different, different moving averages, same name. The weekly 5, I think, is critical here, as is the 21. And we are bouncing off those levels. Settlement yesterday is about 41.2050. So now we are running into the 100-week moving average and the 89 sitting up here. So again, as we said, you look out here to the left, you look at the moving averages, and 4,200 is really the level that has to be beaten here. It's somewhere between 4180 and 4,200. So keep that in mind. And again, you'll get false breakouts from time to time. This could end up being a head and shoulders reversal pattern. We don't know yet. The catalyst could be Nancy Pelosi and something in China. Who knows? But this is the critical level. And I don't know if we're going to get through it or not. I really don't. I mean, my overall view is still that we're in a secular bear market, which would, the average secular bear market is 16 months. The average loss is around 45%. And if that's the case, we're only halfway to the goal, even at these lows. So, we'll see. It's just a matter of, can the market make it or not? And your job is to monitor the auction live and see if prices are accepted up here. So, I can give you all kinds of targets up here, fib targets, everything, but that's really the bottom line. And then coming down to the daily chart, now we did test the daily 5 EMA overnight. I always use the 5 EMA as my stop line. Now, in our strategy and in the trading room, which will be in there today, we've worked each one of these rallies almost precisely. And the last time we were in the market was Friday, and I've decided to just kind of wait and see how this works out. But here is your sandbox, okay? So your weekly sandbox is still the 40.50 to 42.15, 70% probability we stay in that range. And when you're at the bottom of that range, as we were over, we're getting there. I mean, we're not quite there, but we're getting into what I call the green zone. So I usually divide this up into quartiles. And if in any given week, if I can take a long position close to the weekly expected move low, that usually works out pretty well. Again, none of these are written in stone. These are priced from the options market. Already, in looking at the overnight low, and actually that is not the overnight low. I mean, I'm gonna just take the weekly expected move off here. We'll look at it a lower time, or the daily, but we're already at the bottom of the daily expected move today. So that is something to keep in mind. Yeah, I think that is right. 40.84 to 41.57 based on where the SPX options were priced last night. So we've already hit that today, so maybe it's nothing but up from here. But again, these global events are a little bit of a pale over the market. And you can see your high volume node here around this whole 41.20 area is definitely an area to overcome, because you've got the 100-week moving average here. You've got the high volume node here. So, it's important. And then also look out to your left here. This is a 1, 2, 3, 4, 5, 6, about almost 2 weeks we consolidated on the left side. And often you'll see symmetry to that. So we could hang out here for quite a while before the market makes its next move. But on the upside, we're looking for that move to be in the 4,200 range. And even from there, I mean, you could get up here into this level, but I think this neckline of the old head and shoulders topping pattern is a pretty formidable area to conquer. So, looking at the daily chart, maintain a bullish stance as long as there's no hourly closes before the daily 5 EMA. And then I said, watch this air pocket below, because remember that this whole area we're in was where we had sort of this capitulation. There's not a lot of volume in here. There's not a lot of vested interest in here. So, we get too much far below here, and we could slide right down to the expected move low around 40.50. So that's the kind of thing I'll be watching today. And then, I'm also watching the hourly chart here. And I think on the hourly chart, I like to see, if I'm going to be doing long positions, down on the 5-minute or 2-minute range, I like to see my hourly and 15-minute charts staying above their means, and the means usually the 21. So, the 21 is sitting here again around 40.88. This is RTH data, and by the way, that's what I trade. I don't usually have the electronic data on or the overnight data on. I prefer to just trade where the volume occurs, which is during the normal regular session. So keep in mind that the market, right now is back to 4,100 or so. But, it got down to, I think the overnight low is 40.8350. So, we've been down here flirting with these areas, which is actually below the 21. So we'll see how we open. I want to take a quick peek while we're live here to see what is it that we saw that made the market jump there. I don't see anything. Let's look up here. You got the RBA cash rate. Nah, I don't think that was it. We do get the red book here that comes out around 9. So let's see if there's anything else. We've got one Fed governor speaking around 1 today. Eastern, by the way, those are Eastern. We get the JOLTS job openings index a little later this morning. We do have a Fed speaker at 10 a.m. Now, remember, I don't think the Fed is really excited about having a new bull market form here. They use the market these days to try to control monetary policy, which makes the market, trading the S&P 500 not much better than trading Bitcoin. So that's something I'm usually very cautious about trading when Fed governors are speaking. I at least wait till the text of their speech comes out, because they will talk the market down at this stage. If you're going long and you're bullish, you're still fighting the Fed. And I don't buy all this stuff that the Fed's going to pivot the way the market thinks. So here is the 5-minute chart overnight. Now I have the options levels turned on. And so keep in mind, you've got 4,200 is your call wall. You've got huge positions sitting around 4150, and then you've got your volatility trigger down around 4100. Well, 4100 is really your zero gamma. Your volatility trigger is down around 4000, and then the put wall is down around roughly 3900. So, you usually want to look between the put wall and the call wall. Those are your major, that's your major ceiling and your major floor, right? But the volatility trigger is kind of the key, because that's when you start getting into, negative gamma at the zero gamma level, but it gets worse as you approach the volatility trigger. So, just keep that in mind. But large option positions at 4050, 4100, and 4000. The biggest one being 4200. That's where the majority of the options are priced. And again, overall, the options market's been positive, because we've been adding to calls. We went for a long time in June and July without hardly any calls added at all. So the call wall's been moving up. There have been options, call options established overhead. So, I hate to say it, there are a lot of bullish signs here. And it just doesn't feel right to think that this market could actually recover from here. But I've certainly been surprised before. So do not assume that it won't, recover. It may. I don't think it's going to, and it's certainly not my number one scenario. But, I've learned over the years you have to follow the market and keep your opinions, very, very, very rough. So if we take a granular look right now, just kind of looking at the overnight market here, we've got Definitely got some buyers down here around 4,100. So that part's good. Ran a lot of stops down here under this, low volume area and under yesterday's low. We have tested yesterday's low and, overnight. And we've now come back up into yesterday's range. So to a certain extent, that means we're rejecting prices below yesterday's low. We'll see when the regular market opens up, but you've got some sort of air in here. But again, you've got some good support around 4,100. You've got a little bit of resistance up here at about 4,110 or so. So keep that in mind. And basically, I didn't mark the open yet, but the overnight mid is sitting around 4103. So you've got a low at about 4083 and the mid sitting at 4101. Those are areas that are going to be tested. So remember that if you're a day trader, what the market does is it goes level to level until it reverses. So, if we're going to reject prices below yesterday's low, then we'll probably go up to yesterday's mid. And then, let's see, the overnight high is yesterday's mid. So let me show you one other thing here. So let me go to a different view. I follow the auction in 15-minute increments besides looking at the micro auction. So this is yesterday, and I follow the developing POC and value area. But if we come down here and just, get rid of the granular stuff, and let's just look at the normal auction. So these in blue here, that's the overnight activity, and then this is the regular session activity in the sort of brown and red. Let's just look at. So actually, I don't even want to see yesterday's overnight. We'll just look at today. So here are the regular session profiles. And I have both the time and price profiles here. So what you can see is here's yesterday's mid, and which is, the VPOC is not too far below. And you can see that overnight we tested the mid and we came down. We got below yesterday's low, tested prices down here. Not much interest down here at the 4085 level, which is the high from a couple days ago. Again, you can see on the cumulative profile here, the air pocket that sits down here. And we certainly tested that overnight. We're back up barely inside yesterday's range. And then, we'll see some resistance here at 4110. Biggest resistance in the zone is about 4120. And then we run into resistance again around 4135. So what the market will do today is it's just going to go to these different levels, test it. And what we want to do is watch the auction. When you see a thin profile like this, isn't showing a lot of interest up here. So that gives you an idea that, the volume. In fact, I look at the actual contracts being executed. Last night you only had 26 contracts go off at 4122, but you come down here to the VPOC and we have about 5,000 contracts there, about 6,300. So when you're monitoring the auction, whether you're doing it on a 5-minute chart or wherever you're doing it, you've got, basically when you get up here and the profile thins out and you're getting up here where you only have 26 contracts going off, I mean, you kind of know that the market's just not accepting those prices. And that can help you find a reversal when you're hitting one of your other key levels. So if I see that going on and we're coming into, say, the 5 EMA or the 21, I'm going to definitely look at that as a rejection of prices. So like right here on this little micro auction, which is just looking at what's on my screen from 8:15 to 9:30, we're only seeing, 50 contracts going off up here at 4,100. So, it doesn't look like we're getting, a lot of interest up here at the moment anyway. And that just happens to be, again, at the overnight mid. And these are indicating that stops are going off up there. And the reason stops are important is because the first question I ask myself on any given day is, where are the stops? Because what I want to do is get positioned to go right into those stops, because that's where the amateurs are playing. And, in our business, you want to think like an amateur, but not act like one. Institutions don't use stops, right? So when you see stops going off, those are amateur traders, and that's, going to tell you something if they're getting stopped out. And then, you can look at the market structure here. We're coming back up to this level and testing it, and, we're potentially reversing. That's going to tell you something right there. And you can see that over here we had like over 130 stops go off, but here 10. So again, that's a stop divergence is what I call that, and lets me know that, we're probably going to reverse up here. Those are all things I teach in the trading room. So if you go over to blueprinttrading.com, you can join us and join the trading room. We're there on Tuesdays and Thursdays, and that you can learn how all this works and how it all integrates together. But for now, I think the key to today is holding the 5 EMA. If I start seeing the 5 EMA taken out on an hourly basis, I might consider some short positions. I think going long up here, there's probably a trade up to 4,200 if things hold together. So, if I do see things holding together today, I would consider trying to take a trade up to 4,200. And, even at 40.85 last night, or even here at 4,100, it's not so much about being right. It's about your risk to stop, right? So when, I call it finding low risk entry points. If I can find a low risk entry point, for example, we're sitting here at 4,100. I know there's stops sitting up here. I know they're sitting up here, and I sure know that they're sitting up here above yesterday's high. If you can ride even 4,100 up to 41.38, 41.37, that's a positive trade. Anyway, there's the bell. That's the natural end to this video. Have a great trading day. And again, join us over at blueprinttrading.com, and consider giving us a thumbs up today if you like this presentation. Have a great day.